Want to know how to safeguard your money from rising prices? Let's dive into the world of inflation-protected bonds. You might be asking, what are these bonds and why should I care? Well, if you've ever felt the pinch of your grocery bill going up or gas prices skyrocketing, you're in the right place. Today, we're going to explore how investing in inflation-protected bonds can help preserve your purchasing power and keep your investments safe during economic uncertainty. So, what exactly are inflation-protected bonds? Simply put, these are bonds specifically designed to protect your investment against inflation. In the US, the most common type is called TIPS, or Treasury Inflation-Protected Securities. These bonds adjust both in interest payments and the principal value based on inflation, which means that as prices go up, your investment grows right along with them. Imagine having a safety net that stretches as inflation rises. Pretty appealing, right? Now let's break down how these bonds work. When you invest in TIPS, the principal value increases with inflation and decreases with deflation. This means if inflation rises, you'll get a higher return when the bond matures. For example, if you buy a TIPS bond with a principal value of $1,000 and inflation rises by 3%, the principal value increases to $1,030. Your interest payments are based on this adjusted principal, so you're not just keeping up with inflation, you're staying ahead of it. But let's talk numbers. The interest payments on TIPS are typically lower than other bonds because of this inflation protection. If you're looking for maximum returns and can handle more risk, TIPS might not be your best bet. Think of them more like a shield, protecting your purchasing power rather than launching you into the stratosphere of investment returns. So, who should consider investing in inflation-protected bonds? If you're nearing retirement or already retired, this might be an ideal choice for you. With fixed income investments, you want to ensure your savings maintain their value over time, especially when you're depending on them for living expenses. TIPS can offer that peace of mind. Now, let's address a critical aspect: risk tolerance. While TIPS can be a safe haven against inflation, they're not entirely risk-free. Interest rates can impact TIPS. If rates rise, bond prices can fall. Therefore, you should consider your investment timeline and financial goals. If you're planning to invest for a long time, TIPS can help buffer your portfolio against inflationary pressures, providing stability in turbulent economic waters. Here's a relatable example. Imagine you invested $10,000 in a regular bond at a fixed rate. If inflation skyrockets and erodes your purchasing power, you could find that your once valuable investment isn't worth as much. Now contrast that with TIPS. Your investment adjusts upward, keeping you protected. You can sleep easier knowing that your money isn't losing value in the face of rising prices. Now, how do you invest in these bonds? It's simpler than you might think. You can purchase TIPS directly through the US Treasury's website or through a broker. Alternatively, consider investing in a mutual fund or ETF that focuses on TIPS. This could provide diversification and reduce your risk even further. Always remember to do your homework and choose what aligns best with your financial situation and goals. Before we wrap up, let's hit on a few key takeaways. First, inflation-protected bonds are a solid way to preserve your purchasing power during inflationary times. Second, while they may offer lower returns than some other investments, they provide stability and protection. Finally, think about your risk tolerance and investment timeline when deciding if TIPS are the right fit for you. So, are you ready to explore inflation-protected bonds? Drop your thoughts in the comments below. Are you already invested in TIPS? Or do you have questions about getting started? We'd love to hear from you. And don't miss our next video, where we'll dive into another asset class that might surprise you. Stay tuned.